Hello investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about PayPal. So PayPal just reported their Q3 results. The guidance for Q4 isn't looking particularly strong. So we're just going to talk about that. We're going to talk about the Pinterest acquisition that kind of ultimately didn't go through. And we're going to talk about this growth prospects. So just going to jump right in if you don't mind. So it's been quite a difficult period for PayPal, since Q2 was announced. It's just been on the back foot and it's just been so volatile. And you can see that this is a company that normally isn't that volatile. So for 2021, they're actually negative. So, everyone's talking about this being a bull market and exuberant valuations, but that's not what I'm seeing right here. So one of the things I find quite interesting is that they made a point several times about the PayPal, the Pinterest acquisition, that it didn't go through, but it's their responsibility to look at value creation opportunities. Now, I'm just saying that for my part, it's good riddance that didn't work out. I'm quite bullish on Pinterest. I don't have a position either on Pinterest or on PayPal, but seriously, just to say that they wanted to broaden their reach and that they wanted to be able to be with the consumer before the buying experience, through the buying experience, and post-purchase. I don't know. I think it's a bit of hubris to believe that they would have been able to drive Pinterest's engagement. Pinterest is a social media platform, and I don't think PayPal had any business to get involved there. So let's come back to PayPal's growth rates, and they talked about, yes, Q4 we missed our own estimates. We underestimated how difficult it would be once the eBay migration would take place. So they are saying, okay, yes, we are guiding much lower than we previously expected to grow in Q4, but don't forget that going out to 2022, we're going to be growing approximately 18%. The bit difficult that's going to be for PayPal will be Q1 of 21. So Q1 of 21, how it laps into Q1 of 22. So in Q1 21, they were up 31%. So that's going to be a difficult period for them to lap. The other thing that I wanted to highlight is that PayPal was noting to investors that they're going to be growing at approximately 20% compounded annual growth rates into 2025, and that they are on target to reach 50 billion in revenues. So they are saying essentially, yes, we are going through difficult 90 days, but that doesn't take away from the whole story that we have what it takes to grow to 50 billion in revenues. The other thing that I want to highlight is that, as you can see here, just point out that when it comes to investing, everyone is a buy and hold investor as long as the share price is going up. The problem is when the share price takes a down step, everyone's like, okay, difficult questions start coming out of their thesis, and everyone is looking to react. So just wanted to point out one thing here. So PayPal's fundamentals are actually strong. So they put up their headline price increases, and that hasn't stopped merchants from adopting the platform, up 15% year over year. So merchants are still looking to grow their business with PayPal. The other thing that they wanted to mention is that PayPal is saying, okay, so for every dollar of revenues that we make, 21 cents comes down as free cash flow. That implies that for this year, PayPal is on target to reach 5.2 billion of revenue, of free cash flow. So it's very free cash flow generative, this business. Now, just to point out here some things, right? If it's going to grow at 18% into next year, and it's making approximately 5.2 billion of free cash flow this year in 21, it's highly likely, if everything remains proportional, it would be around 6.1 billion of free cash flow for next year. I believe that's conservative because they point out that operating expenses that are not transactional based should only be growing in the high single digits. So there's going to be some operating leverage that you should be seeing. So I believe that this 6.1 billion is actually a very conservative estimate. It's probably coming in closer to 6.3 billion. But for all intents and purposes, if we take 6.1 billion, that points out the stock is priced at 42 times next year's free cash flow. That's not sales, that's non-GAAP EPS earnings, that's actual tangible free cash flow. So it's, you're getting something. PayPal doesn't often trade in the bargain basement, but you're getting something that is priced relatively cheaply to the rest of the market, and you're still getting about 18 to 20% compounded on your growth on top of that. So I think this is something that stays on my watch list. I think this is quite exciting. I wouldn't, if I was a shareholder here, this would not be a thesis breaking moment for me. But if you want to find out what kind of stocks I'm deploying my capital into right now, don't forget to check out my marketplace. It's called Deep Value Returns. You're welcome to check out what other people have said about my marketplace, see the 5-star reviews. I help you become a better investor. Okay, hope to see you next time. Bye bye.